Today we welcome Sil,
I'm a trend-based trader
who sits in 16th place on Kinfo's all-time leaderboard with 834,000 in verified profits.
And this is where the algorithmic approach is so nice. People can't use like ChatGPT to just make up a strategy and it just works. Where humans are really good against the AI right now is
Welcome back, everybody. Today we welcome Sil, who sits in 16th place on Kinfo's all-time leaderboard with 834,000 in verified profits. That million, I don't want to jinx you, but is in sight. We're going to jump into his trading strategies, industry transparency, and his top tips for new traders. But first, I just want to remind people you can get Kinfo Pro and Pro Plus free for your first month. Simply log in, click upgrade, and you get access to the advanced reports and analytics. But first, Sil, thank you so much for coming on. You're rising up the stars. You're one of the future hot prospects. and you're working full time. How was it going?
Yes. Thank you for having me. No, it's a pleasure to be here. Appreciate it.
First, this wasn't on the script, but I very, very quickly want to ask you, how are you balancing earning all of this money? Because you're up 834,000. I think a lot of it's come in the last 12 months. How are you balancing work and this commitment to trading?
Yeah, it's a big one. It definitely comes with a lot of struggles. To give you just a little bit of the insight into my day-to-day. So I work as a site reliability engineer. I work for Splunk. We just got acquired by Cisco. My shift is Sunday through Wednesday. I work swing shift, so like an evening schedule. I trade, of course, first. The market session opens up at 8:30, and trade till close at 3. Then I have about an hour gap in there, and if I have any athletic activities that I want to do, I like to run. I try to get that in during that time. Come back 4 p.m. shift starts. Focus on the job till my shift ends at 2 a.m. I'm also on call overnight, so sometimes I might get paged. Gotta get on, handle that, and then if I gotta handle a page, I do it, and then again, market opens at 8, and I'm right back at it. So I don't get much sleep. I definitely sleep a lot on my Saturdays, but my day shift ends, or my day shift schedule, for the week it ends on Wednesday. So I do get some rest Thursdays and Fridays, but on the evenings of Thursdays and Fridays, if I have, that's usually when I, organize most of my appointments or plans that I have with friends and whatnot. But if I don't have any time filled then, if it's not leisure, it's looking at charts, and I am into algorithmic trading. So I do a lot of coding and, try a lot of strategies out and back test. And all the ideas I'm developing and things during the market session, all of it I try to fit all of it during those Thursdays, Fridays, and Saturdays, when it's like my only day off is Saturday. So yeah, I definitely am at it a lot. But without a wife and kids, I have a lot of free time that I can fill. But that might change soon. And then, I'm gonna probably appreciate some of the time I've put into here as it, helps me and my career going forward.
Gotta make the money while you can, no? Make the money while you can. Take it while it's there.
Yeah.
Did your journey? I've seen a few people's journeys like this actually, where you went down 20K when you started learning, then you were up over 100K, and then you pretty much nearly lost it all again, bringing yourself back down to 15K, which is exactly the situation where I'm in now. For me as well, I did $600 into over 100,000, and I lost about 50K. I didn't lose as much as you, but I lost about 50K, and I just paused during the bear market and thought, I don't know if this is for me. So whenever I see a story like yours, where you went from that 15K up 800K onto $1 million, I just think I'm one step away from being it all. But what was that experience like? How did you have that resilience? How did it feel to lose be up 100K then lose it? Walk us through that.
Sure. So the first thing I will say is don't trade going through a breakup. Yeah. I'm going to quickly just segue into one thing. when you speak with a lot of traders and you try to like organize like what's the most important thing for a trader, you'll hear some traders say psychology, or some will say edge. Those are two of the biggest ones. And people will like die on a hill, one or the other. And I mean, for me, I think all of us could probably say it is a mix of both, but it's definitely dependent on who you are as a person. I think if you have and you've built a lot of mental resilience, the edge becomes more important because you innately have a lot of resilience against some of those things. When you get down, you bounce very quickly. But or it could be if it's more easier for you to find the edge, it doesn't become as much of an importance because you just have a knack for finding out these patterns. But then, of course, the psychology will suffer more, proportionate to that, because that's just where you could use more assistance. And like for me, the psychology department is where I definitely could use like more assistance versus the finding the edge aspect. And so, that experience, like when you were just talking about it, I started from like, it was like 26 or 2.6, sorry. It grew a little bit and then I stopped. And then I think that's when I moved my money into Tradeovate because I finally had something I felt like was working and I wanted to use the leverages of a futures broker to try to accelerate those gains. And and that's when I was, pioneering my new 10-minute strategy, grew to, I think at the peak, altogether it was like 124, something like that. And then, within like, and that was over a period of 2 months at like 1,000 trades. So I was feeling really good about myself, seeing the consistency. And then the markets were also not in the best state for me to trade. I'm a trend-based trader. And of course, when the market goes through consolidation or chop, I innately, it's just market fundamentals. That's not going to be an environment for me to make money. But when you mix that with, really big, personal matters like me going through a breakup and having some additional things in my life at the time, it can really, really get to you mentally. And so, for me, after that experience, the one thing I took away from it was, I need to really understand myself better, I mean, not just from the trading, but also from like coming out of that last relationship that I was in. Like there was a lot of rediscovery for me there. And like during that time, I was like kind of in the market, but not really. I was really taking my space. And then right after that was when I was like, all right, I'm going to transfer 150K. I'm going to put it into the market. The markets look like they're moving. I'm going to leverage up even more because I have confidence that this is all going to work. And I'm coming back with like the most free like mental state I've had in a while, bouncing back from the breakup and having all this self-discovery. And within like, I think it was 2 to 3 weeks, I grew that 150K into about 411K. Just, doing my strategy, trading ES futures and just being leveraged, but being, completely disciplined to the strategy. And then I think September the 1st was the last trade I had made during that cycle. And I was like, I don't know if the markets are going to move as much as I would like. And quite frankly, I think I'm done. So I think I've made more than my money back. And so I just transferred all of it out of my account and actually took a little bit more time away from the markets and started looking at transforming what I had developed for my strategy, which was, algorithmic and everything on the charts, but there was no automation done. So it just told me exactly what to do. And I could sort of fill in the blanks with my intuition where I didn't think there was a right trade or not. But now I was trying to go from there and again, use this, rebirth of myself and this new drive that I had to then build the full automation to where I wouldn't even need to do a trade. It just does everything automatically. And that's where I'm at right now. So
beautiful. So would you say that breakup was one of the best things that ever happened to you, or would you not?
I mean, it definitely was in some ways, yes. There was a lot of lessons that I learned, and it completely gave me what I needed. The pain was what I needed. The suffering was what I needed. And the rawness, to look into myself, acknowledge my faults, see where I was wrong, both with my relationship and the market, and where I was wrong to myself. And use that energy to just motivate yourself to do better for you and for those around you. And that psychology it'll carry you in a lot of places in life. I swear by that.
I 100% agree, because when I first got into trading, it was because of a breakup. I was going through a breakup and I needed to channel the energy from a negative to a positive. And I remember when I was at the peak, look, trading's transformed my life because I'm doing things like this, making money from other aspects of the market, and I've made money from the market. So in various ways, trading's transformed my life to the better. But I did the exact same thing as you, and it turned the negative into the positive. And also, we're talking about losing jobs and redundancies and buyouts and stuff like that. Also, when I lost a job, I was terrified, full of fear. But so I started my own company, and it's doing well now. But I would have never had the confidence to do it. So it's that fear, it's that horrible, uncomfortable situation that drives you to do what you're sometimes destined to do.
Yeah.
And we share that story a little bit in some ways, which is interesting. But you need it. You need adversity. You need it. Like, otherwise, we're just fat lazy humans. You know what I mean?
Completely agree. You see some of the best athletes, Olympians and whatnot, all high achievers in life, CEOs. Most of them went through some form of adversity. Really.
Yeah.
And
you can one way or the other. You can let it destroy you, or you can let it build your character. And there's obviously only one right choice. Right choice.
Yes.
On that note, we'll quickly jump into an advert. Sorry for that. That's still a big spoiler, but we'll quickly jump into a break for an advert, and we'll be right back. If you're an active trader, then Centerpoint is the broker designed for serious traders like you. Centerpoint offers advanced trading tools, flexible routing options, and an extensive short inventory to give you the edge you need with next-level customer service. When you join Centerpoint, you gain access to Centerpoint Edge, an exclusive program tailored exclusively for Centerpoint clients. With Centerpoint Edge, you get free access to over $7,500 worth of industry-leading trading tools that you won't find at another broker. This includes amazing resources like Kinfo, Benzinga Pro, Trade Ideas, Dilution Tracker, and more. Click the link in the description to elevate your trading experience with Centerpoint, where active traders get more. Okay, we are back again, just on that nail-biting bomb. But yeah, 100% agree. I think you have to have adversity, and no one wants to be going through a bad time that keeps you awake at night, or your head's racing. But it shapes you. It shapes you or it breaks you, right?
It does.
So where did it all start for you? How the hell did you get into algorithmic trading? Is it like it's one of the niches? It's not the normal. Normally people are going in via Tim Sykes. How are you doing algorithmic trading?
Yeah. So I will be mentioning, when it comes to mentorship, 2 mentors. So one is going to be just like the general mentor, and the second is going to be my mentor friend. My mentor friend, I think he's on like X and Instagram. I think he goes by the name of Spirit of the Kid. He's a Goldman trader. He's actually been mentioned in I believe at least one, definitely, books on trading from other very, very seasoned traders who have mentioned him and his success and approach to the markets. And he's just a guy that I knew since I was a kid, and who'd been into trading, and we've always he's the type of friend that it's like, you don't talk to him for like 3 or 4 years, and then he'll hit me up, be like, hey man, you want to play this video game? And I'm be like, yeah, let's play it, like nothing ever changed, right? And so I originally came into the markets like a lot of people around 2020. I was still working my job at a previous company, doing well there, but and I stayed away from the markets mainly because my father was like the fear monger of the markets, like it's gambling, you got to stay away. Now the guy's got millions in it, so how perspectives change. But at the time though, he was very fearful of it, and I understand why. But I just see, I look at the markets, I keep hearing about it, and I just see this huge, decline in it. And so I'm like, well, this is probably a good time to invest because, I mean, one, if the world's over, currency's got to be useless anyways. And two, I might as well buy this big dip, right? So that's when I had talked to my mentor friend, and he was like, oh, yeah. He was like, you can open up like an account with a brokerage. And then he got me into some Vanguard funds, getting me on a very safe approach, mix of index funds and technology funds. And then I made I put like 10K on American. I didn't know what I was doing, but I was like, this stock looks really low, and in a year it should go up, right? And then news came out in June, like a month and a half after I put that money in, that they were increasing their fleet by double. And overnight, American doubled in stock price. So I immediately sold in the open, and I'm like, wow, this market thing is easy and fun, And let's just say that success did not continue. I wound up pretty much giving all of it back and maybe a little bit more. I mean, by the end of the year, I was up considerably, but into 2021 is when I started getting into options. I did get into the GameStop frenzy, made 50K in a day off of options, which was like the second day I ever traded options. And I was like, wow, this options thing is really easy. It's not good being very successful very early in the markets, but you have no idea what you're getting into. It breeds a lot of false expectations. But I think that once again, like mixing some of those things, mixing when I was going through my breakup and the losses I had as well during that time, again, those aspects of adversity definitely, I mean, they can either break you. I could walk away and say, maybe this isn't for me. Maybe I should be doing something else. Or I can say, you know what? I still love this, and I'm going to just learn from these mistakes, and I'm going to do better, And so, I tried getting into futures. Now going into 2022, I tried to get into futures, and options was difficult, but futures killed me. I mean, the first time I got into it, I made some money, and then first week I was down like 11K, and I was like, goodness me. And I tried it again, and then I tried it a third time, and eventually I was like, no, I can't do it. I can't do futures. Ironically, it's the only thing I trade now. There might be a trend here, which is whatever I find the most challenging tends to be what I gravitate towards to overcome it, and maybe that's where my drive is the greater the challenge, the greater I have this need to overcome that. Just the satisfaction and the pleasure of the journey, really, of getting there. And so, with futures, I started to get into it one last time, and I was telling myself that because I really felt that I just had an idea that would work better on futures instead of options. And I approached it, and I was like, you know what? If I'm going to be doing this, I want to pull the stops. If I'm going to be using TradingView, I want to learn how to code in PineScript and have everything for my strategy mapped out to a T. My mentor friend says this. He says, if you're going to have a strategy, you need to be able to essentially write down every way that it works. Because if you can't write it all down, your strategy isn't complete. And if it's incomplete, it's imperfect. And if it's imperfect, when you lose that edge, it's going to be difficult to find how to get that edge back. Because if you don't know the intricacies around it and you have some blank spaces, you don't know if those blank spaces are what's dragging you down or actually holding you up more. You just don't have a clue. But the more you understand your approach, the better you're able to deal with those frequencies. And so that's where I started the whole coding approach. But then as we continued forward from the coding approach, I began to be like, and not just use it to help me with, indicators and potential entries. I just went even further with it. I was like, you know what? I want to really get some aspects of confirmation looking at historical data. Does what I have work? I need more confidence. And the best way to get that is to use that historical data. And so I just put more time into it. And then eventually I got it it only needed to be connected to an API to be able to trade itself. And that's exactly, where I eventually got it to. And it took a lot of time and effort, but yeah, it got there.
how do you get into that though? Like, how do you think, all right, I'm a new trader, I don't know anything about the markets, I know a bit of coding, so I'm going to look at all of this historical data and I'm going to figure out a strategy. Like, what's the in-between part of that for new traders? Like, how do you figure that out?
Sure. So the first thing is, for me at least, I had to have good confidence that I had an idea that could work. So I was still traded manually. I still did everything manually. I was doing SPX, zero DTEs at the time. One of my standard strategies was I wouldn't gamble the open, but I would wait for the first 10, 20 minutes before I had good confidence on direction. Again, I continue to be a trend-based trader, even though that's not how I started. I started more as like a chop and scalp trader, but I transformed into this. Had to rewind my brain a bit. And when I would enter my zero DTEs, I'd have my stop at around, depending, usually about 25%, depending on the range and whatnot. But, once it would move a certain direction in the, like, not in the money, but with a high amount of gains, we're talking maybe 50%, I would usually sell against my position and start taking in premium so that I could secure aspects of the trade. So if it went against me, I'm still all right. If it went for me, my gains won't be as much, but there's still gains, more security there. And, the reality of the situation was I wanted to get away from the debt side of options. So I could have gone into selling, but I felt like with futures and the leverage that you had, there was just a little bit more simplicity when it comes to theta. Even though as a seller, it would work in my favor, futures just seemed like it would be more clear cut when it came to a systematic approach because you could eliminate the Greeks and you could focus a lot more on just the simplicities of price action. And so, the way that my approach was like if you were to open up your chart and just put in DXY plus VIX plus TNX plus TLT, what happens is you bring up a chart that consolidates, the dollar yield index, the volatility index of the S&P, the 10-year bonds, 20-year bonds, and Treasury. And it gives you a decent idea as to where you can sort of predict how the market's going to go. And you can use your EMAs. I trade on the 10-minute. I use, 5-7 for my crossovers. And then I use my 21 EMA to basically be like, I go long above the 21. I go short below the 21. But the crossovers also must meet. And so as I was taking a more systematic approach, as I was approaching my strategy with more concrete rules and details, it helped me realize this can now be put into a system. And where there are gaps and blanks that I'm not understanding with my strategy, by coding this, it will force me to fill those gaps. By coding this, it'll force me to start, creating a fully closed strategy where there is no room for interpretation. It either is or it isn't. It's either green day or it's a red day. But either way, you know what it's going to be and you know why, because the rules are there. And from that, you can then make adjustments. But yeah, in order to get to the spot to be able to code, it required thinking about how you're going to take what you apply to the markets every day. Again, write your rules down. Make sure you stick by your rules. Add to your rules and try to make your strategy as complete as you can, to where the idea of needing to fill a gap in where you're looking to maybe enter or exit the market with intuition, you can even get rid of that. Because intuition serves us very well. I mean, it's the collection of patterns and data that we've gathered over time. But I mean, I would rather trust data than my gut.
No, but
I would rather trust, the statistics and probability of the market would drive it. So why not use it to your advantage?
most people that I've spoke to in trading, most of the successful people will all trade basically on data. They might have a very small window of intuition for the entry or the exit within a certain parameter, but most are trading completely on pattern-based data, or they're trading on intuition based on memory data within the memory, like thousands and thousands.
Yeah.
10 years of seeing thousands of charts and they just know the patterns. But either way, it's based on data, whether it's in the mind or not. I just want to check with you. I mean, really, you've took a lot of the pressure off you if you programmed the entries and exits through an algorithm. But when you were going through the difficult time and you were losing money because you didn't quite have that discipline there, how did you get the discipline back, and what do you do now to maintain the discipline?
Sure. So, I mean, I will tell you two things. I still think of myself as a novice because I still haven't been trading for that long. And two, I am still working on the discipline. I still have some losses that come in here and there. I mean, because even though, like you said, a lot of that pressure gets taken off of me because of the fact that it's all algorithmic. I also place unnecessary pressure on me because it's like, now that I've gotten to this point, I want more. I want to achieve more. I want to, I'm developing two alternative strategies right now, like a mean reversion based strategy and a chop based strategy, as well as I'm working with another trader right now. Shout out to him if he sees it, where we're looking at like some principles of reversion towards midnight pricing within market hours based on a certain subset of time. And so like, that's where I'm trying to do more, expand, do more, get more strategies, because that's just how I'm going. I'm accelerating in that direction. And to rewind back and answer about the discipline side, really it came from me just having a greater understanding of myself. Not even the market, not even my strategy, but me having more understanding of myself. Me making sure that like I am just, like I've already explained my schedule. When I am deprived on sleep, that's when the most mistakes happen, for sure. When I'm deprived on sleep, because I do sometimes trade the aftermarket, and my aftermarkets, I mean, I shied away from it because that is very intuition-based trading, and it has served me quite well, but it's obviously also created some losses. And the biggest problem when I do that is I can see how if I have a loss in the aftermarket, it can impact the way that I perceive the market session, because I may have not given myself the opportunity, within that time frame of sleep deprivation and being up all night, to give myself the mental reset that I need. And a lot of times when I'm in a okay-ish spot, I just let the algorithm do it, let it do its thing, which is really what I should be doing anyways. But, again, sometimes I want those extra gains because in a lot of cases, I see where there might be, using intuition, you sort of know when the market and the price action is doing something, and I might say, no, the algorithm's going to be wrong here. I can say with almost complete confidence it's going to be wrong. And now it sucks when you're wrong, but a lot of times it's right when I have that sort of perceived notion. But like I said, for me, I noticed, for instance, when I'm tired, I make a lot more mistakes. So when I'm tired, I try to stay away from the markets as much as possible. And I just try to always make sure that if I'm not in a good mental spot, I have the advantage of all that work and time and energy that I've put into this automated system. So I should just let it do its thing. And patience is something that I'm starting to come back to. I used to be a very patient person. I think this journey, ironically, has actually eroded some of that patience because of the pressures I've placed on myself. And I'm slowly, as time has gone forward, I am slowly kind of rewinding that back and saying, look at what we've done. Look at what we've achieved this far. Like, we don't need to we've already taken some of those unnecessary risks or even necessary risks in the past. It's time to be a little bit more patient. I've got all these other systems that are being built right now. I mean, be patient, work those out. And instead of me participating in trading, which I don't ever want to stop doing, I do have a smaller account that I do much smaller trades on, because I like to, of course, get the screen time, get that market exposure, analyze the price action. Like, I don't want that to ever go away. I want to be close to the charts, but take a step back from the big money. You can let it go automated and, work on these other strategies. And when we get them into a good place, push them out, So, yeah.
That makes sense. And yeah, you definitely can't force the market to do anything you want. That's one of the biggest mistakes that happen when you force the market to do what you want. But like, what motivated you to be on Kinfo?
Yeah. So first I was going through, man, how would I say it? Probably mid 2023 into late 2023. I was approaching, this, I guess I was approaching the market the way that I was. things were going, fairly well. But during that journey, I was like, kind of going through a dark period where I hadn't really talked to many people about trading. And so then I was like, oh, let me look at the day trading Reddit. I guess there's something there, right? And then I saw how, a lot of the recommendations for like verified traders was like connect your account with Kinfo. And so I was like, okay, this Kinfo thing, let me go into there. And then, I went into it, connected my account, and then I'm like, oh, I actually really like this thing. It's got like a nice UI. I like the interface. It's simple. That's what I want. I want simple, concise, clean information. Little pretty nice charts that aren't, too much of anything, just simplistic in the way that I like it. And so I literally had just used Kinfo just to like kind of keep the tracks and keep the logs and journal, because I know that I should put more effort into my journaling, even though because I record keep myself, I record keep how my algorithm trades, I record keep how I trade, so I can kind of cross-reference, what the algo did, what did I do, where were my trades better, let me try to analyze that a bit. But in terms of like some of like the greater pictures, like looking at days and all of that sort of thing, which I can do through my system, I've built so many tools within my automated solution. It's a lot easier and cleaner on Kinfo. So, that's where I leverage. Yeah, that's where I leverage it a lot. So, yeah. And so obviously I've just continued to use it. And then, after like a month cycle, I just go and sync and then just kind of review and bada bing, bada boom, So, yeah.
You don't really probably deal with any furus or pumpers. I was going to ask if they help or hinder the market, but do you have much? Because in micro cap stocks and penny stocks, which is what a lot of the people trade who are on Kinfo, that I generally say you have a favorite furu or pumper. Does that apply to you? Because you're in a different market, I think.
Yeah, I'm at the table with a lot of people with a lot of money that like to really play with things in a, I guess, predictable yet unpredictable way, right? Because ES is you're gonna need billions to move that thing. And yeah, it doesn't necessarily apply, I guess I would argue, with the price action, because I don't think anybody has the money again to move it like they would be able to a small cap. But I think that you're still gonna have more than enough people out there that are gonna try to teach you, oh yeah, like you can make money, trading this one indice if you just follow, my 3 cool tricks here, just got to pay $49.99, and then it's like, so, I mean, with the teaching perspective of it, I've seen a lot out there. They all seem like red flags to me. The one mentor that I did have, the truth is, I don't even know if he was a profitable trader. Like, I really don't. But he spoke like he had knowledge, and it was knowledge that I knew he had, and I could see how the knowledge helped me with my approach. And some of my approach actually is derived from the teachings that I had from him. So I mean, he could have been a profitable trader, he could have not been, but I was referred to him by another trader who I thought was a fairly seasoned trader, and trading underneath him, I can't say it served me wrong. It definitely served me well. I mean, one could argue I would have found success anyways with the time and energy and effort that I was putting into the market. And that is probably true, but it doesn't hurt when you can get that help from elsewhere, like from my mentor and, of course, my mentor friend, who really taught me the value of being a seller, for instance, when it comes to options. So important. I think so many people buy when there's no reason to buy. I mean, there's a little bit of joy to it. There's a joy. I mean, I've had, 1,500 SPXs before. It doesn't, I mean, nothing feels like it, but how often does that happen? If we're talking about making consistent money and smart money, be the market maker, sell, So yeah, between those two, that's where most of my information came from. My mentor friend, of course, I trust 100%, and he knows his stuff. I mean, when he talks, you just know he knows his stuff, stuff well beyond me. But yeah, with gurus and stuff like that, I've been fortunate enough to be warned, and I don't believe I've had exposure into learning from someone like that. I've always also kind of had the awareness to be like, when people have tried to be like, hey, you should come over here, I'd say, I really don't need it. I've got my trusted sources if I really need them. And I've always actually approached my journey, relatively solo. So yeah, I guess that has partially served me well, going on a predominantly solo route, and then of course where I needed that help, going to that one person or the other person.
I mean, what would you say was the best piece of advice that you were given in your trading career so far, or when you started?
Ooh, that's a good question. So this is what I always say, and this was derived off of a bit of what my mentor friend had told me, but I'm saying it in this way, because it's just what I tell every trader. It's not about what you make, it's about what you lose. Risk management is the name of the game. And you can make all the money you want. Like, I turned that one account to 100K. You did something, just as amazing, if not more amazing. But it doesn't matter if it all goes, down this drain again. It doesn't matter at all, right? I mean, it's like, and this is where the algorithmic approach is so nice, is with everything being so systematic. I can put so much emphasis on the numbers and data in a way that just isn't possible when some of the gaps are intuitive based. And, again, my philosophy there, which of course is a bit of the information that I've gained, which is it's not about what you make, it's about what you lose. Algorithmic trading really brings out the most advantages in trying to harness that theory.
I can make sense, because if you're not trading an algorithmic style, it's almost like you can practice that way if cut the losses quickly, let the winners run. It's a similar thing. But then just one bad day, not feeling right, little bit tired, you let one loss go without the right brokerage interventions or the max risk or auto liquidation from a broker. It can just wipe you out. And I suppose that brings us on to the next question. I mean, do you have any risk management practices to protect yourself, or anything that you'd recommend?
So outside of course of, my algorithmic risk management systems, for myself, what I try to do and this is where it's actually been very nice outside of just doing the algorithmic trading for the automation, is I've also taken my lessons from that. So when I do my own trades, I exercise using ATRs. I try to work off of ATRs for profit targets. I look at levels, of course, something that my algorithm does not really do. It'll look at levels for profits, but not so much for stops. I've been thinking about looking at that approach, but for myself and my trades, I try to take that algorithmic approach. So I work off of the ATRs. I look at where, levels are, and, because it's not my primary source of trading, I try to always make sure that size is consistent, and I make sure to not overtrade. Again, I try to trade in my own way that is not a part of what my system generates, but it's still a profitable way to trade, which is why I continue to do it, even if maybe I should not. I will preface that. Maybe I should not, but it's been working. And I think that's just, again, I am like a lot of the other intuition-based traders in that sense, where for this style of trading, which is normally the aftermarkets, again, I take some of what I can from what I've learned from the algorithmic style. So I use ATRs. I will usually do like a 1 to 2 risk reward. So my risk will be 1 and my reward will be 2. I usually, if we're doing aftermarket, I'll do something like, depending on how I see the price action, 2x or 3x of the ATR for my my stop. I might be getting this wrong, or like 3 to 4 for my profits. It's when I'm in the charts, I know what to do, but as you can see, it's not a complete system. And that's why I also talk crap about myself when I trade like this, because it's not a complete system. But there's nothing wrong with doing something like that. If, of course, like you were asking me, like if you have an aspect to help with risk management. And for me, it was, instead of looking at levels as much as I used to, I now look at, is there a very strong level? And if it's a volume-based level or a major psychological level, like 5,600, 5,500, or if there isn't, what is the ATR? And what is our current standard deviations within the aftermarket range? Because the aftermarket's predominantly chop. So I try to trade based off of, these probabilities, these statistics and matters, to try to give myself the best edge in those moments. And like I said, it works most of the time, and that's the form of how I normally trade now. I do trade market sessions as well, but yeah, experience, of course, but also deriving what I've built from the algorithmic trading solution and bringing some of those lessons back into how I now trade has really helped with my risk management, for sure.
And ATR is that average true range? Is that
average true range? Sorry, I probably should have said that out loud. Yeah.
It's cool. And just one question to close on. I suppose we'll change it a little bit, because I think you probably have inspired a lot of potential algorithmic traders to probably follow in your footsteps. There'll be a lot of people who think, "Oh, I wanted to do that, but I never quite had the thought." So, I mean, if someone wanted to get involved in your style of trading, what's the first few things they should do?
The first few things they should do is, first, make sure you've got the time. Make sure you've got the time. You should already have that ready if you're approaching trading in general, but make sure you have the time. The second thing is, I would really say one of the best ways to start is to, again, have a strategy. The first thing you got to do when it comes to trading, you have to have a strategy. Whether it's algorithmic, it's self-driven, you need to have a strategy. So have the framework for your strategy configured. Don't rush into the coding too quickly, because then you might fall down the rabbit hole of not understanding what overfitting is, or where, you're compiling too much based on historical data that you're not leaving room for forward testing, and then all your trades are going to fail because you baked so much of previous data in. There's a lot of this stuff that can be learned through raw trading, and by having an actual strategy, it can help actually keep you from some of those problems with being too much of a engineer or like a coder that's trying to force patterns into recognition and things like that. There's a reason why, in my opinion, I think this is the reason why people can't use like ChatGPT to just make up a strategy and it just work, is because even if you train the model, where humans are really good against the AI right now is we can discard bad data so quickly. And I think that our ability to do that comes from our ability to predict future data, something that the AIs that we've developed don't have that great of a concept of doing, which is also why when you go into longer time frames and you have longer trading spreads, not just AI-based trading, but algorithmic trading also loses its effectiveness with greater time frames. So, we should first leverage our strengths there to find the starting points of the strategy that can actually work. And from there, I'm not getting paid or sponsored by anybody, but from there, my thing is, it's probably easier to go with a tool like TradingView and to use PineScript, because it's like a very simplified form of Python that makes everything a lot easier. And it's not perfect. And, I'm eventually going to move away and put everything into Python, probably have it in an ECS container in AWS and have it all run and do its own thing, or maybe something different. But, it does offload some of the responsibilities that you would have, and it does bring some simplicity. It gives you a UI. It makes it pretty simple and concise that, a newer trader that's trying to get into this can leverage that and use it in a way that's very effective for them. That was my journey. That's literally my journey. So I can completely testify to that and say that it's what, it gets kind of bumpy and choppy at first, but, I wasn't even using ChatGPT and stuff for code. And I see so many, there's a trader that I work with right now who's getting into it, and he doesn't know much about coding, but he has ChatGPT help him a lot. And I'm like, why didn't I think of that when I was learning? So we have a lot of tools at our disposal. Definitely use them. Yeah.
No, that's fantastic. I think we'll just close out on that. Very unique interview, very, very interesting approach, something we've never had in any of the other podcasts. So thank you for bringing that value. Truly, truly appreciate it. I'll be watching you, but when you pass that million, I'll be there to say congratulations. I don't want to jinx anything, so touch wood. But thank you so much for your time. And we're just going to close out with the message from this sponsor. Well, guys, just wait 1 second. I just do want to remind you all, the Centerpoint Edge offering is available to everyone. We've got the link just down below in the description. Check it out, and thanks for watching.